This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Bashardis. Thanks for joining us at XM.com. A massive week lies ahead for investors. Central bank decisions in the United States, Eurozone, and United Kingdom, earnings updates from several Wall Street tech giants, and a heavy dose of economic data releases that include the U.S. employment report all have the capacity to inject volatility into global markets. All roads lead back to the Fed, which will announce its rate decision on Wednesday. Inflation finally seems to be cooling, and leading indicators suggest economic growth is losing steam, but the U.S. labor market remains historically tight, and financial conditions have loosened, keeping the risk of a second inflation wave on the table and complicating matters for policymakers. Markets have fully priced in a 25 basis point rate increase, so the market reaction will depend mostly on Powell's commentary. Meanwhile, the European Central Bank and the Bank of England are both expected to roll out bigger rate increases of 50 basis points, outpacing the Fed for the first time this cycle. Turning to the equity market, a sense of euphoria has been the underlying theme so far this year. Wall Street indices, led by the Nasdaq, have charged higher. The VIX fear gauge is trading at its calmest levels since the tightening cycle began, and spearheading this entire rally are the riskiest and lowest quality names. Meme stocks are back in fashion, alternative crypto coins have returned to life, and the market reeks of a gambling attitude similar to 2021, as extremely risky options with 0 days to expiry are the latest hot trend. Behind this euphoria lies a liquidity dump that has countered the effects of the Fed's quantitative tightening process this year. The S&P 500 is now trading at 18 times this year's estimated earnings in a slowing growth environment, which leaves the market vulnerable to a sell-off in the case that this week's tech earnings or Fed meeting contain any surprises. In the commodity arena, oil prices are trading lower on Monday, despite a new wave of tensions in the Middle East. Drone attacks against military facilities in Iran have left the region in a state of unease, with a Wall Street Journal report suggesting that Israel was behind the strike. Even though oil infrastructure does not appear to have sustained any damage, it's still strange to see energy markets so calm in the face of geopolitical tensions. The next key event is the OPEC meeting that will begin tomorrow. This was today's Daily Market Comment. Thanks for joining us at XM.com.